Good morning, everybody. Welcome to the Flow Show. It's Bank of England Day. Lots of fun and games to come from those clowns, I expect. Morning, gents. How are we doing?
Good morning. All good.
Good, good. Good to hear it. So probably going to get our last thoughts in line for the Bank of England, what we're trading, what we're looking at. But we'll get through some of the headlines first. Give me 1 second, sorry. Clearing a frog in my throat. Starting with China and some CPI data out overnight. Not showing any real inflationary pressures coming out of there since the reopening. As you can see there, CPI in the month minus 0.1, year on year coming in at close to flat at 0.1%, not as much as expected or the previous month. And PPI also much worse year on year, so not really anything inflationary coming from them. What that has done is it's got the market talking once again about possible rate cuts, things like the RRR cut and others. But on top of that, China already has asked banks to lower interest rate ceilings on some retail and corporate deposits effective the 15th of May. That was according to some sources yesterday. Apparently, the big four state-owned banks are to lower the interest rate ceilings by 30 pips, with some other financial institutions cutting by 50 pips. But that's on deposits. That's interest rates on deposits. But still, some moves there to bring down rates. So perhaps we should see something along those lines coming up from the PBOC if inflation doesn't pick up over there at all. On the geopolitical front, China is apparently seeking to resume and expand Taiwan communications. I couldn't find the real super nuts of this story to find out what that means in its entirety. It sounds a bit positive on the initial look, but then similarly we've got their Foreign Minister Qin Gang coming out saying that China's national reunification must be realised, which includes folding Taiwan back into China. So I'm not sure if that's two competing headlines there regarding what's going on over there. President Biden said that a call with China Z is in the works. So that is something to keep an eye on. That's if he can remember where he's left a post-it note with Z's number on it, as well as his own name. But we'll look at that when it happens. Over to Japan, and some data coming out there from Japan. The bank lending is probably one of the key ones to pick up from there. Year on year up 3.2% versus 2.9% prior. A little worse on the current account, but much like most of those sorts of numbers, it's flipping around a bit over in Japan. Now, we had the summary of opinions from the BOJ, and once again, I won't call them hawkish for Japan, but more subtle shifting in language towards exiting the easy policy. They said they must ensure that a tweak to interest rate forward guidance is not interpreted as a sign the BOJ would allow future rate hikes. The achievement of the price target appears to have come into sight, but must maintain easy policy for the time being, given the downside and upside risks. There is a risk that sluggish real wages may push Japan's inflation well below 2% and may not return back to 2%. Japan's inflation likely to continue rising for the time being due to rising labour costs and the impact of overseas inflation. Japan may see wages continue to rise next year due to intense labour shortages. This spring's wage talks led to high wage growth, but the problem is whether this will be sustained next year and beyond. So a little bit of give with one hand, take with the other. They're acknowledging that inflation is likely to continue rising, but they still see it falling below 2% towards the end of or latter part of this year. Wages is still a big key measure, but they have acknowledged that, as I say, the achievement of the price target appears to have come into sight. So weight is going to remain an issue going through all this, and whether inflation stays high. Now, Ueda was out with a few comments, and Bloomberg have picked up on a subtle change, they're calling it, in translation, where he's moved from talking about persistent easing to patient easing. May not sound like much of a difference, but as we've been saying for many months now, if we're going to get changes from the Bank of Japan, it's going to be slow and steady, and even things like simple language changes will indicate that movement towards exit door. Kay, what do you make of it all?
Yep, exactly that. Slow changes, and yeah, subtle changes, but changing the language is not going to change the interest rates, right, or the monetary policy. So yeah, I think the base case is still there. It's going to be very slow, but then the same base case says that they are preparing a normalization. So I think we are going to repeat that at least until the 15th of June. And Ueda is still a very good communicator, and he still wants the market and the government and the Japanese whales to know exactly where they stand on a nearly daily basis. So that's going to, he really wants to avoid shocks, right? And that's going to be the Japanese way of doing things. They shock on in one direction, but they rarely shock in the other direction. Let's put it that way. That's been the case for the past 25 years or so. Yeah, so I mean, nothing really new. And then yeah, the rest is Bloomberg trying to pick the words as they see fit. I'm not going to read too much into that.
Yeah, definitely. But we are, you know, I still maintain we're as close as we've probably ever been to them getting out of this policy.
Of course.
And it's going to continue. And the reaction in the yen, I don't know. This is all really small stuff. So, you know, it's not like the market's going to send, you know, yen pairs lower by 100 pips on these sort of comments. But what it does do potentially is start building very slowly the expectation of a change. And that's what will move markets. And I think maybe all this debt stuff in a pair like particularly dollar yen, I think all this debt stuff and everything else going on is the main driver at the moment. But if we were to get over that, I think BOJ policy expectations, at the same time Fed expectations and what's going on over there is going to have more of a say. Whether that means we see a move down 130s or more, I don't know. It needs the stars aligning, but I certainly think the downside is more the easy path right now, just on the Bank of Japan side than the upside for dollar yen. That's a bit of book talk in there, but trying to keep it objective. Well, that's my view. Certainly dollar yen isn't really rallying hugely at the moment. But as I say, get the debt situation out of the picture and we can see how things stand from that point. Over to the RBA, and there's been a freedom of information request done on the RBA, and apparently documents from as early as or way back as March said that the RBA were assessing a 4.8% rate in its policy. So getting rates to 4.8% as maybe their sort of terminal rate. And they're looking at different situations, i.e. hiking at 25s to get there or hiking at 50s to get there, spreading them out, doing them quickly. But it's interesting to note that they've got that sort of number in their mind, 4.8%, as we know they're back on the hike trail. So something to keep an eye on if that's what they want to keep doing with hikes. That might be the level where they see a top coming. Guys, you got any thoughts on that? Quite a strange pull out by the press on that one and the RBA.
Well, not much to add, really. Sorry.
No worries, mate. Okay, fine. We'll move on from that.
Yeah, It seems the market is really, I don't know if the market is really paying too much attention to rumors and opinions and whatever. Right now, they're rather hanging on to facts. What I find really, and it's not per se a reaction to what's been said overnight, but is that moves have very, very little shelf life. We're seeing moves to the one hand, to the one side, then the other side, and then you come back into the middle of the park. I think the market really is in a kind of a wait and see mode, and you've got more intraday moves than really taking the long-term view on what may happen in the central banks. In FX, I'm talking, okay, in FX. Other instruments, we know about the overhang of risks in some things, but in FX at least, seems like the market wants facts rather than a lot of opinions these days.
Yeah, I mean, for me, it's just there's not many central banks that put a number on their rate hikes. Obviously you've got the dots from the Fed, but the ECB, the BOE, they don't put numbers on where they expect rates to go. They could have a rough range. So for me, the fact that this was from the RBA saying 4.8 maybe puts a bit of a target in. At least we may know where they might stop if they're forced to go that high.
Because as you rightfully said yourself a couple of times in 2021 was that they will never hike or whatever before 2024. But now they are talking about taking it further than what we may expect. I mean, that's RBA for you then, I guess.
Yeah, exactly. So we won't be surprised if they take rates up, they put it that way. And then we could have to see what the market wants to do with it. And that's where the trades come from. If the market underprices that, and it looks like we're going there's a potential trade. Conversely, if the market gets very expectant for that and that reaction is in the Aussie, then that presents a trade as well. So that's why we look at all this stuff coming out. So moving on to Europe. And the Bank of Spain's chief economist apparently sees the economy growing around 2% in 2023. That's up from the prior forecast of 1.6%, and sees growth above 2% in 2024 and 2025. ECB's Muller says rates still need to be raised, but not as quickly, and that slower rate hikes allow the ECB to assess the action so far. One of the arch doves, Centeno, said sustained reduction of inflation will continue to be ECB's priority. Monetary policy in terms of fixing key rates is at the maximum of this cycle. An interest rate adjustment is still underway. ECB's policy will stay tight for some time after the rate peak. Rates should start to come down at some point during 2024. We must be approaching a terminal rate if this is done in June or July. But there is a very important condition, and that is inflation. So even one of the big doves is still seemingly happy to go for hikes, but he perhaps sees one and done, or maybe two at tops over the next two meetings, and then that's the top for him as far as he's concerned. ECB's Villeroy says, we have travelled most of the way with hikes. What's still lying ahead is more marginable. Now we had that. We had a piece out yesterday saying from Bloomberg, a sources piece, saying that there's reports some ECB officials are starting to think a September rate hike may be needed. That shot euro dollar up to the 110. And ECB's Nagel's added to that a bit this morning by saying there's nothing off the table regarding the September meeting, nothing off the table regarding the September meeting. And some of those September rate hike calls may be due to the latest ECB consumer inflation expectations survey, which saw a fairly significant jump in what consumers see inflation over the next 12 months and 3 years. The 12-month number jumped to 5% versus 4.6% in February. The longer term saw 2.9% versus 2.4% prior. So a big lift up there in inflation expectations, and that is a huge part of the ECB's thinking, those expectations. They want them, to coin the phrase, well anchored, and they don't seem particularly anchored based on those numbers. Coming over to the US and looking at the CPI from yesterday, and give or take, it was pretty much as expected. Core CPI, that number came in as expected, 5.5%, confirming the 1 pip drop there. And CPI was a pip lower than expected at 4.9% versus 5% expected. Now, you could look at this two ways. It's another drop in inflation on both measures, so it's going in the right direction. But the month before we got this 5%, it dropped from 6%, so a whole big point it dropped. So it's only dropped 0.1 points this time. So maybe it's slowing up, who knows. Now the initial reaction in the dollar, as we can see, let's look at, what should we look at? Dollar yen. As we can see there, we got a big trip up basically on those numbers. Dollar yen all the way down. It has recovered some since then. Dollar strengthened around the grounds, then it bounced a bit, and now we're looking a bit weaker today. But for me, the inflation picture is going the right way, but it's not going as fast perhaps as the market wants to see. One other point from those numbers was that real average weekly earnings were still negative, but not as much as the prior month. Does it have it there? The year-on-year numbers? No, it doesn't. So the year-on-year numbers for those average weekly earnings was down 1.1% versus a prior minus 1.5%. Average hourly earnings year-on-year down 0.5% versus a previous minus 0.6%. So obviously real wages, the negative side, are getting better as inflation comes down. If wages keep rising, then that gap is going to close further. What do you two guys make of the CPI yesterday? Not a big change or variation really, but still a decent move.
Yeah. So like you correctly said, CPI dropped by 0.1, which is almost flatlining after a pretty decent drop over the past 7 or 8 months. Is this the beginning of a bottom in inflation? I personally don't think so, but I tell you what, if inflation stays at these levels or, God forbid, goes higher, I think that's going to bring volatility to the market, because the market's pricing cuts still, even in 2023. So what do I think? Yeah, there you go. So that's it's been a really nice straight line trip lower in inflation, so from 9.1 down to 4.9. So that's and I've been talking about that. I actually thought it would have reached lower levels by now, something like 3%, but obviously it's going it's stickier than I thought, but the trend is still there. And the question is, how does the Fed interpret that? How do they change their outlook? Because what they're doing is they're changing their the rates, and they look forward into the future, 1 year, 2 years forward, and they say, have we done enough to bring inflation down in the medium term? It's basically what the Bank of England is going to tell us today, right? That's what they do as well. So have they done enough? Probably not, but the overall trajectory is encouraging for them, at least. So do I think that the Fed is done hiking? I think it's 50-50. I think there's possibly another 25 left, but at the moment, as things stand, I think it's a good chance that they're actually done. They're paused. And yesterday's number, excuse me, yesterday's number didn't bring any surprise to change my view on this, or to, I think, change the Fed's view on this. So all in all, yesterday's number was in line, maybe marginally, yes, 0.1 lower on the headline number year on year. It should give enough to the doves and basically people who want the Fed to pause, it should still be enough for them to feel relatively okay. This will change if we see a print going higher. I mean, that for me is going to be a disaster. So for now, I think we're still on track. We're on track. I don't think they're going to hike again this year, even though they keep talking the talk and they indicate that, yeah, more may be needed. They haven't said explicitly that we're done. And also to go back to the ECB that you were talking about before, I think the ECB will really, really like, even though they do talk hawkish, they would love to pause as well. And the Fed pausing will give them more peace of mind, and it's going to make it easier for them to pause likely earlier than expected. Just my thoughts overall, and then we're going to talk about the Bank of England in a bit, but that's a slightly different story as far as I'm concerned. But yeah.
I mean, the rate probabilities are currently pricing the Fed keeping rates unchanged at 91% and a hike, the balance of that. So, some of the market are definitely looking at the Fed pausing. Again, we got PPI today, which I think is going to be equally, if not more so, important as the CPI was yesterday. Because if we get a big negative number there in a year-on-year number, that's going to get expectations pumping for a negative or further falls in inflation down the line. But still running 2.4% there. So if that does go negative, expect some fireworks. Kay, what are your thoughts on the CPI?
Yeah, I think it's too sticky to pricing cuts. That's one. And yeah, if they want to go for one more, but don't forget we have another CPI before the next meeting, if I'm correct, right? Before the next FOMC.
Yeah.
So if you see the core come down enough, then that's going to confirm a pause. Now they are at 5, 10, 12 and a half on the average, right? On the midpoint or the Fed funds. If core stays at 5.5 for the next print, there might be another 25 in there to make sure that they go positive, as Powell and the others hinted at, go positive in all the yields, all the rates. It's really flipped the coin, but the only dollar really weaker today is, or in the aftermath, is the dollar yen, and that may be for different reasons. There's quite a few yen crosses who let go. So there's more of a technical reason there. If you look at the euro dollar, we're lower. If you look at the cable, we're lower, and then you name it. The rest is this. Most of the dollars are higher, right?
Yeah.
So that's some kind of market saying that we may need to reprice a bit in FX. But then if you look at the yields, they're actually a little lower than when we went into the CPI. So it's still a bit of a mixed picture on that CPI. But if you and then I go back to what Stelio said, if you think that ECB is going to take a pause of the Fed as an excuse for them to pause as well, then they are going to lose the whole scissor effect of the euro versus the dollar, in my opinion. And so far, I must say that Lagarde hasn't given us anything to think that they are going to try to use that pause, because Lagarde at heart is a dove, right? But she has been forced to be hawkish, but she kept the hawkish line over the past few speeches or interviews that she gave. So I don't know. It would actually be the opposite would play in favor of the euro if you consider that a stronger euro is also combating inflation. They may use it if the Fed pauses to have a little bit of a scissor effect on the euro, but that's music for later. But that was just a thought that I had. I think it would be a mistake from the ECB to pause at the first pause of the Fed. So I think I don't know what they are going to do, but I think it would be a mistake. So That's what I think.
I agree with you, Kay. I think it
Yeah.
would be a mistake, but I just fear that they're going to take any chance they
Yeah, I
can
know
to
it.
be.
Yeah, I know exactly what you're saying. And the Bank of England may be in the same in the same boat, knowing Bailey. Yeah. So really, I see the dollar stronger, and as we have been doing in the room, and people in the room, they know what we've been doing. We had like a bit of a team effort there on at least the Aussie and a couple of other currencies as well, rand and stuff, where we bought dollars because we didn't really understand why the dollar was getting sold off, barring versus yen. And I think that's more still of the logic approach, because if the CPI doesn't go down fast enough, the market will need to reprice a few things, right?
Yeah.
So that's basically it. Now on to the next set of data for me. Really,
Yeah. Exactly.
I still have trouble to find longer term positions at current levels. Let's put it that way.
Yeah, no, agreed. And on the ECB, yeah, I think they've made it pretty clear that what their fight is, what their goal is, and they're showing no signs of stopping until they get good evidence of that. And we've seen inflation up, down, up again, far more higher levels than what we're seeing in the US, and I think that gives them the rope to keep hiking.
Yes.
As I said, I think maybe 2, possibly 3 left in the tank.
Yeah, I don't know about the third one, but let's also not forget they don't have the same mandate as the Fed, because a lot of market participants think perhaps that most of the major central banks have the same mandates. It is not the case, right? So they don't have the same mandates. ECB, Fed, Bank of England, whatever. They all have their own mandates, and we can't completely forget about that. Fed is not the only central bank out there. They are a big guide, of course, because of the role of the dollar, but they are not the central bank who decides upon what other central banks have to do or will do.
Yeah, and you got the Fed. The ECB's mandate is purely price stability, and that's inflation close to but below 2%. That is it. No, not jobs, not economy, nothing like that. And it's below 2% or close to but below 2%, as they like to say, and that's it. And they'll keep going until they get there, whenever that may be. Last headlines was the White House on the debt limit, saying that talks were productive and everyone understood the risk of default. Staff will be meeting daily on the debt limit or on debt until the leaders meet again Friday. Yellen was out again with almost daily warnings of impending doom if that doesn't get sorted. The market's bored of her chat now. So Friday is the next point where we may get some headlines again, further constructive talks or more can kicking until another meeting, and it all drags on. That's where we are with that one. So coming to today, and obviously we've got the Bank of England coming up. Market largely expecting a 25 pip hike from those guys. The votes is what's important from this one. Let's just see if I have those up. Do we have the votes up here? Yep. So expected, again, a 7-2 vote for a hike, with 2 keeping those unchanged. Now, the thing with the BON is vote numbers is this is where they can signal moving towards a pause a bit more clearer than some of the other central banks. If we get a hike, but the vote is less than 7, then that shows that the tide is turning and we're perhaps going further towards a pause. They can use these votes, how should I say this, strategically to indicate to the market what they're going to be doing. We have got 2 arch doves here. I mean, one of these, Temrero, who's voting for unchanged, she would potentially look to switch to a cut, which may be seen as dovish, but considering it's her and she's a top dove, might not be that reactionary. But that is a risk as well, that one of these unchanged moves to a cut. But overall, if we get less than the 7, that's going to seem dovish on a 25 pip hike. And then afterwards, we get all the forecasts, and it's a press conference today because it's the monetary policy report. So Bailey will be up and shouting. Kay loves when Bailey talks. It's almost
what's your bids?
Yeah, it's almost a I wouldn't say a banker.
He's a real pound killer.
Yeah.
So what's your bids? I think I'm not going to be bidding cable before 124.5 today. Whatever happens over the meeting.
Yeah.
But by the way, I think there's absolutely, like I said, for the ECB as well, zero reason to be dovish today. But we have those two Uber doves in there who are probably going to force the balance at least to be neutral or so. But I personally don't agree with the one more and done scenario. So put again to my head, I'm going to say this is going to be a hawkish one. And at the end of the day, I'm not saying right after Bailey or so. At the end of the day, I wouldn't be surprised if sterling trades a bit stronger. But I have a question for you, Ryan. Dingra, yeah, she's still there, right?
Yeah, I believe so.
Yeah. When does she leave? Because that must be very soon, right? And be replaced by that other person.
Yeah, I think there's one going in June. I don't think Temreiro's there for long either.
Yeah.
We'll have to look into that.
Yeah.
Yeah, good point. Yeah, I don't think they're too for, like, unless obviously they get taken on again or extended. But I'm not sure what's.
No, I don't think so. I think there's at least one replacement is already done, and I forgot the name.
Yeah, Mark just said Temreiro leaves after June. Yeah, I thought she would.
Yeah, but Dingra as well, no? Or is that one person replacing Temreiro? I forgot about it. I lost track.
I'd have to have a look.
Yeah. We'll come up with that in another flow show.
Yeah, but that'll likely be for the next meeting. We'll have to consider that. Depends if she's going to leave before or after. But what happens is usually is any new members, they come and sit on the board anyway, even if the old person is still in the seat. I can't remember who that was. It Dingra that happened with? I can't remember. The last person who came on the board, they were at the meetings and giving opinions, even though they didn't have an actual vote. But we'll have to see what gets swapped in, swapped out.
All right, I've got it there just for the sake of clarifying. So it's Megan Green, sorry, has been appointed as an external member, and she will start her 3-year term on the 5th of July. So I don't think before July anything will change on the Bank of England, as Mark already said as well. Temreiro leaving after June, so that's clarified. I think my work is done here today. Have a good day.
Yeah, thank you very much, mate. All good. Michael's just asked, do you reckon recession fears somewhat prices in the BOE forecasts? This recession stuff that we've been talking about a lot. You wouldn't look at it. You wouldn't look at the pound right now and think that we're pricing in a recession. More the market was previously pricing bad news for the UK, which, as it turned out, hasn't been as bad as expected, as has been the same in a lot of countries. So we probably have seen a bit of pricing out of bad news, if you like, for the UK, which, as I want to point out from time to time, particularly in this country, we tend to take an overly sour look at things, or dour look at things. It's always a glass half empty rather than half full. But for today, this is one of the, again, with the BOE, it's always difficult. Okay, it's what they should do, what they will do, and what they shouldn't do type scenarios. What they should be doing is getting rates higher, without a shadow of a doubt, and they should be taking a strong line on things like the Fed and the ECB have been doing. What they have been doing is taking a weaker line on things, and probably worrying too much about that. But in the meanwhile, inflation still remains higher. I still say we're going to 5%. We'll be at 4.5% at the end of this meeting. So that's only 2 more hikes to get to that 5%. The market is coming around to that as well. I think some pricing has us priced at 5% terminal rate. Certainly a lot of the banks are putting a 5% label on things now. So really it could go two ways. Okay, we could get a vote that's less than 7 for a hike, say 6-3 or 5-4, something like that, which will be seen as dovish because it puts us towards a pause. But then Bailey could come out and say, well, yeah, but we're going to look to continue because inflation isn't coming down as much as expected, or the economy has done better than expected and there's lots of wage pressures, and indicate that they've got 2-3 more hikes in the pipe. So it really is a coin flip with this one, and it's trading between those details that you've got to be careful with. And obviously the forecast as well going to play a big part of that. So for me, I mean, I'm not, the only pound trade I'm in is in euro sterling long, and I'm long short term around the 87s. I'd expect that probably to get flicked out over the volatility over the announcement. So I'll see what happens there. But really, on balance, I think the pound, I think we're in for a hawkish one. So that might be something to look at. If we get less than a 7 vote and we get a dip in the quid, that might be something to jump on as a bit of a fade, try to see if it rallies through Bailey or after. But at the end of the day, you look at the pound, it has remained bid for quite some time. It's come through Feds, ECBs, US data, UK data, and it's maintained this bid up here. So even if the BOE are mildly dovish, you've got to think it's going to get through that as well, perhaps, because it's really going to need something extremely dovish to send the pound much lower. So on balance, I would expect we will probably be higher than when we are going into it by the end of today. That's just my thought anyway. What are your thoughts for the quid today, folks?
It's a tricky one because theoretically the Bank of England should be going full steam ahead. I mean, they really should, based on inflation. The problem is the Bank of England are going to say at some point, look, we have a 2-year horizon and we think that in 2 years' time, inflation is going to be at target, and that's their goal. Who the hell knows what inflation is going to do in 2 years' time? Nobody does. We don't even know what it's going to do in 6 months' time. But the problem is that they can easily come out and say that. I have a fear about the Bank of England because they always try to be dovish, but with inflation up here, I think the chances of them being surprising, let's say, the market in a dovish way are low. So I want to be buying dips in the pound. I've said before, I think 2023 is going to be a good year for the pound, and it has been so far. The cable I like because it's broken out of a channel and it's it's looking better technically. Again, also the euro pound is broken down below 87, right? So that's also, I know you're long that one, and it could well, on a dovish meeting, could well come right back up, and that then would look pretty bad for euro pound shorts. But at the moment, I am still, based on my kind of macro view of things, I am still bullish the pound. Both versus the dollar and the euro. I prefer the cable. I do prefer the cable, though.
Yeah. And it's, going back to Kay's comment on the euro and its effect on inflation, that's a big driver here, considering that a lot of our inflation is driven by energy, which is mostly priced in dollars. So as we've seen oil coming down and the pound remaining bid, that's good for buying energy in dollars. So you get $1.26 now while oil's coming down, and before you get $1.24, 23. So that is also the same as ECB. It helps with inflation as a double wind, if you like. Kay, what's your thoughts for the quid? And then I'll answer.
Yeah, it's pretty much unchanged, mate. I'm also still a buyer of sterling on dips right now, just because that the real data haven't been falling out of bed, or at least for sure not as bad as feared, and also not as bad as what may happen in the rest. We've seen the past couple of days, and again, it's industrial production. Again, it's still Q1 because it were March data, but Germany, Italy have been slowing down. I will be or try at least to sell a rally on the euro sterling right now, and then yeah, looking at the same levels approximately in cable. I've been saying in the room, if there's this big magnet area in the cable around 124.5, and it's also what Stelios showed roughly the level where that channel broke. It could be a really good level to get into it, because I look at yields and I look at differentials and stuff, and there's nothing really that tells me that the dollar should go right now a lot further than it has gone. But it's going. It is going. I mean, cable is lower than yesterday, quite a bit lower actually. But because there's still that big level of from, where is it, 126.75 up to 127.5 or so is going to be big in the cable as well. But I don't see much to justify a weaker sterling right now, and I'd view destructive Bailey as an opportunity to buy a few sterling today. Yeah, I haven't changed my mind yet. I still find sterling as a currency to be showing good resilience, and so that's still my favorite side. Let's put it that way.
Yeah, no, I agree with that for today particularly. Just to bring you some headlines, apparently there's been an explosion in the centre of Milan. Several vehicles in flames after an explosion in the centre. Reporting Italian Sky TV over there. So not sure what that's about. That's why I had a little quick flick at the euro to see if there's anything going on. Nothing seems to be going on there, but just keep an eye on that one. Not sure what's happening over there. Mike was asking about euro sterling and support. Well, we're in a bit of a support zone right here, down pretty much from 70s down to the 60s, sort of 64, 65. I'm not too keen on the lower end of this band right now, just based on prior price action down there. It's been a bit wishy-washy in that, but it's a bit of a zone there. If we do break through there, then we're going to start hitting some other big support. The main level for me is down at 85.5, right down against that prior low down there. It was it's been a bit of historical support and resistance point, a bit of a break point as well. So that to me would be a decent stretch point to look at. You can find some levels a bit higher up, 85, 70s. But if we do get a big move, that's the sort of area I'm looking at where it might run into trouble. Pete wants to have a look at pound rand. You're the rand man, Kate. You want to have a look at that one?
Pound rand? No. But look at the rand. I mean, it's just rand, mate. It's of course you look at sterling rand because sterling is trading a little bit stronger and or weak, and the rand is really getting slapped pretty hard. We are close to 19 on the dollar rand. I think if you want to know what sterling rand does, have a look at dollar rand. I mean, that's rand is just getting hammered versus everything, right? I mean, there's again problems in South Africa. There's again those issues of planned load shedding, blackouts and stuff. It's nothing really plays in favor of the rand right now, and nothing of the earlier problems seem to have been solved by ousting the Eskom CEO. So yeah, I think the rand is I don't know where it's going to stop, but it really looks like there's more to get hammered there.
Yeah, yeah. And I hope you've got a pass. Hope you got a letter from your mum, Giuseppe, about why you're late today. Oh, it's not good enough, mate. It's not good enough. How can you be late on BOE day of all things? I'll have to give you 100 lines to do. Bailey is Bailey isn't going to send the pound lower. Write that out 100 times. Who wanted to look at Abir wanted to look at Guppy. Looks heavy. Depends on your context, really. That to me doesn't look heavy at all. Yeah, we've had a pullback off the highs, so on the shorter term charts, it's probably looking a bit heavy. This is a type of pair you want to look at what happens up here. If we get a hawkish BOE, if it doesn't break this level on a third attempt, you've got to think that that's as far as the market's willing to take that. Now, if that happens today, while all the other yen pairs are looking a bit soggier, then perhaps that's one to fade pound strength on. You know, something like cable, maybe a bit of a runner higher. Something like Guppy may be one that runs up a bit, hits that high and says, that's enough, thank you very much. And then we switch around to doing what the other yen pairs do. So that's my perspective on it anyway. Yes, it does look a bit heavy when you come down to the shorter term chart. You know, we couldn't quite get back up to those highs. We got a little bit of a short term top up around here, the 171s, 71.15s. So yes, it looks heavy, but you know, we're not down to that prior low after hitting those highs. So it's a bit middleish from here, and that's going to be obviously going to move when Bailey and whatever drop their bombs later on. If you're looking for support down towards this 165, 60s, 50s area, is probably where you want to be looking at from prior price action down there. Kay, do you want to take it over? Maybe answer that question from Michael about the MEX.
Yeah. It's some interesting.
Yeah. So is that merely following the Fed in terms of monetary policy as opposed to what's happening with the data or the inflation?
Yes is one answer, but Banxico have already indicated that they may start to pause. So we've also seen the inflation starting to pause there and coming back a bit lower, right, Michael? So sorry about that. They're probably in pause now, but there's other stuff going on in the Mexican peso. And for people who have been listening to the Flow Show when I speak about the mix, and for people who are in our room, they know exactly what I think about the mix. There's a couple of things going on, and first of all is the proximity of the US, the nearshoring changes. There's a really nice word for expressing that the fact that the US has been indicating that they wanted to move away from China. Other countries wanted to move away from China, and Mexico being so close to the US and being one of the manufacturers, and increasingly one of the manufacturers of the US, is enjoying a lot of inflows. And no later than yesterday, there were like some articles again about the Mexican exceptional situation, seeing like not only the US, but German car makers and even Chinese companies diving into Mexico. So that is driving and plus the Mexican peso being an 11% currency, where you get at least 6 or 7% more than wherever else, especially in the majors. It's still driving the Mexican peso to get stronger and stronger. Now, what I've also said is that we have to see for how long this price action can go, because I've seen volumes in the mix, and they haven't been that strong, but those volumes were from a week or 2 weeks ago. So, and looking at how the mix has behaved in the meantime, it's definitely seen some more inflows. But for the time being, to reply to Abir, when can we finally buy dollar mix? Keep an eye on what the volumes are doing, and keep an eye on whatever goes on. Perhaps the Banxico indicating the pause, which I think they somewhere in hidden terms already did. Thanks, Gavin. Yeah, so I was saying, when can we buy dollar mix? I don't know really. We have to know either when the Mexico pivots, or when we see possibly trouble in the US, because as we know, Mexico being in the proximity, if we see problems in the US, then actually your Mexican peso should weaken a little bit. But for the time being, I'm really not in a hurry, nor willing to fight this move, because the whole world is diving into Mexico, basically. So it's very tough to hold that or to stand in front of that train right now. Okay, quick look, because I'm looking at the time. Quick look at what sterling is going to do, or what it may not do, over the Bank of England. So my base case is to try and buy a dip in the cable. This trend line here is coming in lower. It's only around 123 at a bit, but I think this magnet zone that I've been talking about many times, 124, 40, 65 ish. This is a bit higher. 124.80 could already be enough. But if you do the line on the bottom here, we end up again in this 124, 50, 65 or so zone. That would be a decent enough zone, I think, to try it, for me at least, because I'm looking at the US yields. They are not really looking that buoyant. So yeah. On the other hand, if we start to get back above 126.10 post Bank of England, then I think we're in for the test of the 126.75 to 127 zone. Today, this comes in around 126.90. And then we have this one, the 61.8 of the big decline, 127.60. So if sterling really catches a bit, I reckon it's still possible to get up there. But we'll see what the rest of the dollars do as well, because the rest of the dollars are really pretty big, I must say. And I'm a bit scratching my head as to why they are exactly big. Perhaps it's just because the rest is holding up, like stocks in the US are holding up pretty well. I don't know. I don't really know why it's so big, especially today. There's a lot of secondary data driving a lot of stuff. So all right, euro sterlina. So now we are through this 87, 15, 25. I was short. I've cut it. What was it? Yesterday? Yeah, yesterday afternoon, just to be safe on the Bank of England. Already here, it may be enough. 87, 15, 25 if we see it. But then we will be having a look at this broken trend line if we go any higher, and that's around 87.60. So if Bailey manages to kill the proud pound again, as he usually does, and sends euro sterling a lot higher, this is likely going to be a tough nut to crack now. 87.60. If in turn we get what I would say would be a logical report, which is not a dovish one, then I reckon we are in for a bit of a test lower here, and anywhere between 86.10.15 and 85.80, why not? Can it go lower? Everything's possible in the market, but it's going to be a big one here, around 85.5 as well. So keep that level in mind. That should really come in as a very strong support. And I don't think that this one central bank meeting can cause a move which is over 1.5% in euro sterling. Okay, never say never, as I say. In markets, everything is possible. But I would suggest that if you're short euro sterling, this would be a bit of an ideal zone to at least take some off the table. But my base idea is to buy a few sterling if I can on a decent dip. Yeah, people were asking about sterling yen. I'm not going to get involved in sterling yen on this one. But sterling yen, you should really look at what's happening in the 168 for a starter, 168.30, 50. And then here around, I think that's going to be a bigger zone now because we've seen traffic there. So this is a traffic zone, right? Between 166 3/4 and 168.30 or so. It's a 1% range, but this pair can go really fast. Especially with still some yen volatility in there and what the sterling can do. If ever this gives way, it's bad news in my opinion, and for at least 165.5. But yeah, those are pretty important levels on the way down in the sterling yen. If in turn yen says, okay, I've seen enough, then we are looking at 171 again, 171.25, and then those previous highs, which are starting to look a bit double topish here in the 172s. Okay, so based on how yen behaves, I would be a bit cautious to be too long around up at those levels, but nothing is impossible, of course. Euro yen, short looking to at, yeah, you've probably seen the head and shoulders up here, right? This one here, it's been on our Twitter handles, it's been blog posts, it's been shorts, short videos. So a lot of people looking at this one here, this head and shoulder, and well, we can only note that it's breaking. So 147.60-ish, give and take 10 points, algo blips or whatever. 147.60-70 is where it should be kept if you want to look to ads. If we close back above, then I think it's back to 148, 148.5, and a bit higher perhaps. If we see a continuation, look for a confirmation under 146, 75.80. It is possible that if this starts to really play out, we are going to see levels of 145 again. And why not retest the big break levels here but that's much lower, yeah, 143.80, 144. I don't know. I'm going to say I don't know because I don't know what dollar yen is going to do either, because this one is having similar shape as that euro yen, but the test of the support line has held just below 134, right? So we're having two issues here for this one to break. Is the first support, and then this low that we put in here, where the second support lies around in the 133s, and then we have another issue because we stopped right in front of the 133 last time. So we need a weaker dollar to see this develop. So for as long as we don't really get that, yen crosses may be a better play if you want to be short, but I don't expect either to see fireworks. Perhaps as Ryan indicated on the PPI, we can have a bit of shenanigans if that's really a much lower number, then this is going to come under pressure, of course. But until then, be a bit careful when in the short term at least what you do with your dollar yen. Okay, dollar rand. I have to mention it because we've also been in this one. Yesterday we entered. I was waiting for this 48.58 zone to buy a lot in the dollar rand, but instead I bought some here after the US CPI, and then I added through 1880. Been already taking some off. We have 1.272 here around 1899, and we are breaking it right as we speak. And now I'm looking for at least a retest of the prior high here. There's nothing really good in South Africa for the time being. And I think it also has to do with if you can't buy one emerging market or market currency, you buy the other one. And I think there's a lot of this one going on as well, is mixed rand, because you can, if you pay away spread or funding in dollar rand, you can get it back in via the mix. But let's keep an eye on this dollar mix, though, the dollar mix side of things, because this, I think, is coming into a bit of support here. But I'm not a buyer because of all the reasons that I've been explaining before. I'd rather look at setbacks now, somewhere closer to 1790, 18 to perhaps re-enter. And then just to name one cross, if you look at that, this is the euro mix. Why would you fight it? Why really would you fight it? So this, I think, any decent retracements, perhaps somewhere here around 1945, 1955, there may already be enough. And that's it for me, Ryan.
Yeah, thank you very much, mate. I don't, Stale, you got any last minute thoughts you want to add before we shut up shop?
No, I don't. So good luck, everybody.
Thank you very much. Yeah, thank you to you two guys for your input today. As always, I hope we've set you guys and girls up for the BOE expectations and you know, how to navigate safely through it trading wise. You got your levels, you got your expectations. Watch the votes, watch the comments, watch the Bailey, and we shall find out what happened tomorrow morning on the Flow Show. Thanks for coming, folks. Have a great day all.
Thank you. Thank you.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.